All right, so good evening, everybody. Yeah. I'm glad, honored to be here. Just like I've said earlier, right. So I have a topic right before me, market structure, and it's broken down into different subtopics: trends, broker structure, support and resistance, discount and premium zone, looking at Fibonacci's and introduction to rates. These are just awesome topics that I believe we need to all understand when we're trying to trade more the forex market. Whatever strategy you're using, I know we have different kind of traders here. I all know you guys. I all know your analysis. I all know your trading techniques. This is not to teach people a particular trading methodology. This is basically to just show everyone the little light we believe we have, and we can just proceed from there. Good. So, guys, when we're talking about market structure, we're talking about the backbone, the skeletal system of forex trading. You need to jot it down. Market structure is the skeletal system of forex trading. The skeletal system of forex trading. No matter what strategy you're using in forex, no matter what concept you're using, if you don't understand market structure, you are definitely going to be having issues, because the market doesn't just move in any direction. The market has been programmed to move in specific direction at specific times for specific reason. Like my mentor, shout out to Matthew Ramirez, he always says something. He said, is rinse and repeat. Rinse and repeat. The market is textbook. Whatever happens in the first page in 3 days ago, in 5 days ago, will always happen again. Whatever happens on the higher time frame will always happen on the lower time frame. That is something that you need to clearly understand. So you don't just jump into the market, maybe possibly you might be on this call, you just don't jump into the market because you believe that the market want to move in your direction. In this market, we don't trade by believing, we trade by knowing. And the level of your knowing determines the level of your results. It is a game of probability, agreed, but nevertheless, your consistency with your mastery would give you an edge of knowing better. Do you understand? So you need to have a basic and a good understanding of market structure. I tell people, if you trade only market structure, you will become 65% right, 65% good in this market. I'm telling you, because after I explain a lot of things, we'll go back to the real life charts, and you see this thing. It is rinse and repeat. Textbook. Everything is the same thing every day and anytime. Do you understand, guys? So set your heart, because this is the concept which every older educators will be teaching upon. Whatever strategy they'll be teaching you in the long run, it will be based on market structure. You need to understand this thing clearly. Oh, I also want to agree with the fact that everybody has different concepts of market structure. Everybody has different understanding, different ideology. I have come to respect you all for your ideology. I'll just be teaching my own little ideology that has helped me over the years and have allowed me to impact a number of people over the years. So that's what I'm going to be teaching you. And it is in my opinion. You understand? All right, so good. Now, guys, let's start like this. I believe we all know. All right, so let's do like this. Types of market structure. Drop it in the chat if you know it. If you know them, types of market structure. Guys, if you know them, drop it in the chat. Let's go. If you know the types of market structure, drop them in the chat. That's how it starts. Am I seeing anybody drop something? People are typing. All right, I'm gonna wait. Who's coming? Who's typing first? Guys, you all need to get engaged in this. Who's typing first? The types of market structure. Oh, amazing. I love that, guys. Let's go. Type it. Don't bother what someone else has typed. Type yours. That's how we get to know it. Whatever other name you know it as, type it, guys. All right. Okay, so we have the uptrends. Possibly we can also call it the bullish run. Yeah, bullish. We have the downtrend. Possibly we can also call it the bearish. And we have the consolidation. Others can call it the ranging. Some can call it choppy markets. It's all depends on whatever everyone want to call it. Consolidation. Yeah, let me just go over the chart. Definitely, guys. You guys got it. You guys got it. I love you guys. Thank you very much for responding promptly. Thank you very much, guys. So we have three types of market structure. We have the uptrend, we have the bullish, we have all bullish, we have the downtrend or the bearish, we have consolidation or ranging market. These are the three types of market structure that we have, and these are just the three directional paths where the markets move. Either it's on a higher time frame or a lower time frame. Either it's on a monthly time frame, a daily time frame, even on the 1 second time frame. It's either the market is bearish or downtrend, bullish, uptrend, or it's consolidation. Yeah, accumulating, manipulating, distribution. Anyway, everyone's your opinion about accumulation and distribution asks another interpretation. Let's just keep it simple. I tell people keep it simple, don't compound it. The why you keep having issues in trading is because you want to compound trading. Trading can be as simple as ABC. I tell my team, trading can be as simple as ABC. Just keep it simple. Don't need to compound whatever anything is. So now, so we just pick it one by one, guys. I'm gonna just go over it. I'm just gonna go over it quickly. So we have the uptrend or the bullish. Right, so let's just quickly go over them quickly, do some charts, and just catch some fun. All right, so when we're talking about uptrends, we're talking about something that goes in a zigzag manner. It's not compulsory. Okay, I want to do it like this. All right. Now, guys, it will never be picture perfect like this on the chart. Know that it will never be picture perfect like this. You understand? So you need to know this. Now, for a bullish market, always start from the low. It always start from the low. And in the bullish market, what we mean is that the buyers are in dominance in the market. Now, in every market, whatever time frame, there's always the presence of buyers and sellers. But when the market is bullish or uptrending, it means that the buyers are dominating the market. That's just simply what it means. Buyers dominating the market. Keep it simple. Don't compound it. So it always starts from the low, then it goes to the high. And it retraces back and creating a low. Then it gives an expansion phase, giving us the I'm going to explain all this terminology, guys. Just hold on with me. Then it retraces a low. Okay. Let's just push it up a bit. And now comes up here. Perfect. All right, good. Now, terminologies. Let's quickly look at terminologies. As a low, high, higher high, higher low. Very good. So these are just the terminologies, just in case you need to know them. Now, guys, I need you to see something. I'm not going to be writing a lot. Now, guys, it starts from the low, which means the buyers pitch it from a low. Then they take it to the high. Now, when it gets to a high, and at that moment, the buyers are seeing the market, but the sellers overpowers them at that moment. At that moment, there's going to be a declination, and it comes down to a place where the buyers can gather more strength, can gather more energy and push. I'm trying to make it just fun so you can understand. And when you're looking at the chart, you understand that, okay, it got to this place, the buyers lost energy, they lost money, they couldn't continue, but so the sellers dominated the market and pushed it down. And when it got to a level, the buyers was already charged up again, and they were able to gain momentum and push it up again. Sellers again came into the market, push it down, and went like that. Now, rules of uptrending market. Number one rule is that price always start from the low. If you're jotting, please do joy to jot. Number two rule is that a higher low can only be known if the candle close short based on the body. The candle close short based on the body on that time frame, not the week, guys. When the candle closes based on the candle body, not the week, on that particular time frame. Why am I saying that? Because a week on a higher time frame is a candle body on a lower time frame. So we need to balance that. So when you see a week on a higher time frame, for example, you see a week on a daily candle, it is that weeks are body candle on lower time frame, like 1 hour 50 minutes. You understand? So based on the time frame that we are doing your analysis from, the candle closure of that candle must not close below the previous low. It must not close below it. That's how you know your higher low. After that, higher low is not confirmed when a new higher high is formed. I'm going to explain that for you. I repeat myself, it always starts from the low, rule number one. Number two, higher low always closes above the previous low based on the candle body on that particular time frame. Now, after you've seen this as a higher low, that doesn't validate it yet. Why? Because the only thing that validates a higher low, even though it has printed as an higher low, is that a new higher high must form. And how does an higher high form? It forms when the candle closure, the bullish candle closure precisely, closes above the previous high. So it is a high that is higher than the previous high. That's why it's called higher high. Then it retraces again. Now, guys, look at this. Why didn't you put higher low here? Fine. It closes above this, but was it validated? A new higher high was not formed here. Do you understand? So this stick closed below this. So this place is just, I don't want to go into details. Let me just say. So this is not a higher low. Rather, price went up, came down, took this out, and still closed above this. So this is our higher low, and give us a new higher high, higher low, higher high. Guys, if you understood that, drop a 1-1 in the chat. If you don't understand, drop a 2-2. If you understood, drop a 1-1. If you don't understand, drop a 2-2. If you understand, drop a 1-1. If you don't understand, drop a 2-2. I want to see people that don't understand so I can quickly go over it again. Drop a 2-2 if you don't understand, guys. Drop a 2-2. Okay, good. All right, I get it, guys. I'm going to repeat myself again. Good. Now, see, guys. All right, thank you, guys. I'm going to repeat myself one more time, then you have to go watch the video. For a bullish or an uptrend, it always starts from the low, which is low, which means the buyers push the markets up to a level of high, and they've used up their energy. Real life. I'm just trying to make it a real life. When you're pushing a car up an hill, you're driving, you're pushing a car up an hill. When you get to the top of the hill, you get very tired. You've used up your energy. So that's what it is. A car is moving from point L, and it got to point H, and it was tired. Now, so sellers enter the market and push down. Now, for higher low, the candle closure, I'll be showing you in the red chart, the candle closure of this particular chart must respect or close above this previous low. based on the time frame. So if you don't understand what time frame means, if you don't understand what candle means, please go to babyplease.com. I'm going to drop it in the chat now, because I believe we have different kind of traders here. We have the newbies, we have professional, we have masters. So go to babyplease.com, read up what candles and candle closure and the anatomy of candle. Yeah, do that. Then after this has been closed, we can see it as a higher low. Nevertheless, we need to wait to validate if this higher low is an higher low. And how do we wait to validate? We validate by getting a new high. That is, the candle closure of this place closes above this. It's called higher high. Why? It is, this high is higher than the previous high. This is called higher high because this high is higher than the previous high. This is called higher high because this high is higher than the previous high. This is called higher low because this low is higher than the previous low. This is called higher low because this low is higher than the previous low. This is called higher low because it's above the previous low. Do you understand? So now taking a look at this scenario, let's give us a higher high. It came here. This should be a higher low, but we are waiting to validate. Now, the only way we can validate is that if a new higher high is printed. But looking at this place close below this previous high, so it's not got the higher high, and it retraces. Now, this retracement, which means the declination, opposite of a bullish, the declination still closed above this previous higher low and expanded to give us a new high. So this is low, high, higher low, higher high, higher low, higher high, higher low, higher high. Now, guys, the truth is you will never see it a picture perfect like that in the chart. Sometimes you can see something like this. You can see something like this in the chart. You can see some news effects, something like this, you know. It's not always picture perfect, so don't expect it to be picture perfect like that. So I want to assume a lot of us got it already, and if we don't get it, we can always go over the video again just because of time factor. Now, downtrend. I'm going downtrend. All right, downtrend slash bearish markets. All right, good. So we are gonna have this. Yeah, I love this. All right, so let's start. The downtrends always start from the eye. No, it always come from the eye, which means the sellers are in the markets, they're dominating the markets, even though the buyers are there. It was the slow, then price retraces to give us this lower high. Then price gives us this lower low. Sorry, I just want to push this up a bit. Okay, good. All right, good. Now, right. Guys, it will never be picture perfect like this. All right, so what I'm trying to explain, I'm trying to say, it always start from the high, then sellers will push it down to a low whereby they've exhausted the energy, they've exhausted the resources, the money they have, and you know, they've exhausted the money they have. Danny, I'm gonna clarify that. Just hold on. They've exhausted the money they have, and buyers take it up. But now, this place closes below this high, closes below this high. it's called a lower high. Okay, sorry, let me give you terminologies. Okay, so this is a lower high. All right, lower low, good. All right, good, perfect. So now, so prices and buyers push up, but the candle, the closure of the candle body, not the wick, on that particular time frame. Now this closed below this, making it a lower low, which means it's a high, but it is lower than the previous side. As I see lower high, then sellers sell it down. Now this closes below this previous low, so it's called a lower low. It is low, but still lower. Now, a lower high is validated when there's a new lower low. Just like a higher low is validated when there's a new higher high. Do you understand? So price went high, low, lower high, lower low, lower high, lower low. Now look at what price did. Now, just for Dandy that asked me the same question, now this is something happening here. Now, price pushed up back to this first point. It closed below this, which should make it a lower low. But we need to wait to be able to validate. Now, how do you validate? Price must come, this must come down and close below this. Now, did it close below? No, it didn't close below, it closed above. So that's not a lower low. Rather, it still went up. Now, along these teachings, one of the educators will be teaching us liquidity, so you understand why this thing, all this move, why they are like that. Internal liquidity, external liquidity, they'll be teaching you. So that's not my topic. So now, price went up here, came down, did not give us a lower high because it was lower low, because it was not lower than this. It went back again, closed below this previous lower high, came down, did not close below this, did not close below this, went up but closed below this and tanked down. So all these things are just what people call consolidation markets, ranging markets, Asian session, all those stuff. So price is just trying to gather a lot of people money, take out the retail traders in this market, and it went down. Do you understand? Went up again and went down. So it came high, the low, the lower high, the lower low, the lower high, the lower low, the lower high. Even upon this drama here, this is the lower high. Came to the lower low, lower high, and lower low. Guys, if you don't understand, now for those that don't understand the loan, if you don't understand, drop a 555 in the chat. If you don't understand what I just explained by the downtrend or bearish market, drop a 555 in the chat. Drop a 555 in the chat if you don't understand. Oh, good. Everybody understood. Oh, awesome. I'm glad. All right, so that's that for that. Then we go to the next market. All right, so this is the ranging / consolidation. All right, all right, good. So I'm just gonna try and explain something that you are good in depth. Now, all right, so ranging and consolidation market. Some other people call it a sideways market. Sideways market. It's always like this. Yeah, I'm gonna go in depth on this now. So the market just goes, something like this. That's something like this, It's not gonna be picture perfect, guys. All right, so they just say trend line traders, people say this is a trend line. All right, good, no doubt, no argument, So price is just doing what? It's just going in a zigzag manner to the side. Now one funny thing is, beautifully, in a ranging market, you will still see an uptrend and a downtrend. You will surely see it, because the market does not just do like this. No, market rather does like this. So sometimes you just see this massive pull and you see this retracement. Yeah, can that person mute himself? Havilah, can you hear me? Look at that person and mute that person, please. All right, so market goes like this, high, low, and just keep going sideways, 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 sideways. Just hold on. All right, guys, please always try to mute yourself. All right, so this is just the ranging market now. That's just all I'm going to say about all this. Aside from, I don't trade the ranging markets. For me and my team, we don't trade the ranging markets. Why? You're going to get understanding in the other sections when every other educator is going to be teaching. All right, so having said that, the next thing is breakout structure. So I've done trends, trends. Yep. So the next subtopic, breakout structure. Some people call it BOS. Now, see, guys, let me tell you something, guys. All respect to everyone here, and in my opinion, some other people call it who knows that is CHOCH, something like that, right? Have anybody seen? If you've seen something like this, can you drop a 1-1? If you've seen CHOCH, something like that, drop a 1-1. Drop a 1-1, guys. Good, you've seen it. Good, amazing. I'm glad you guys have seen it. Say, guys, change of character, perfect. Awesome. I'm glad you guys are truthful. Now, guys, keep it simple. Change of character is just another name for viewers. Simple. Break of structure. Simple. Don't compound forest. Forest can be simple if you choose to say it simple. Why you're facing an issue, just like I said, is because you are looking for an holy grail from different trader. CHOCH is also break of structure. So people also give you understanding, they'll call it a bullish, that is one called a bullish break of structure inside the break of structure. So guys, don't compound it. Break of structure is break of structure. What's break of structure? The market decided to change from a bullish direction to a bearish direction, or decided to change from a bearish direction to a bullish direction. Simple. Chicken, no argument. Nevertheless, I respect whatever anybody's opinion is. We are just learning in life. All right. So this is gonna do it now. All right. So I think this is enough for that. Now, guys, I'm combining two things together now. Look at it. This is the I that I responded to a low, and retrace back to give us a higher low. Sorry, a lower high. Then went down again to give us a lower low. And we have this lower high, lower high, lower high. Guys, it would never be picture perfect like this on charts. Now, after that, we saw that instead of price should respect this region, instead of price should come somewhere close here and go down. Yeah, that price is what it blasted through. You understand? So when price blasted through, we call that your CHOH, CHCH, when it's not chemistry. All right, that's just in lighter note. We call that break of structure. So we call that the break of structure, and price now start from a higher low. Sorry, okay, a higher low, and it keeps going. And then this gives us a higher high, and a higher high. You understand? So break of structure, price was coming all the way from the bears were in domination. Then suddenly the federal government pumped in money, non-stop money, the Trump pumped in money, and it changed the structure and from a bearish market to a bullish market. Do you understand? Break of structure means change in directional structure. Simple. Change of character means change in directional character or structure. Simple. When you say someone change character, it means the person was doing something before and he's not doing that thing again, but he's doing something else. Guys, you understand? I believe you do. So that's just it. All right, so let me not compound it because I want us to go to live chat. Oh shit. All right, good. So the next thing is support and resistance. I don't know why Havilah gave me this support and resistance. All right, I'm going to say something about this. It's my opinion and something I just believe in. Now, guys, support and resistance. David is typing. That's what I want to say. Now, support and resistance, to me, it exists, but actually, to me, I believe there's more to support and resistance in the markets. There's actually more support and resistance. Now, it depends on how you guys see. Depends on how you guys see support and resistance. Some people actually believe. Okay, good. This is actually support and resistance, guys. This is support and resistance. Yeah. That's why I told you guys I don't trade range in markets. This actually supports and resistance. If you know what this upper part is, guys, drop it in the chat. What's this upper part? What's the name for this upper part, guys? Yeah. What's the name for this upper part, guys? Upper part, guys. What's the name? If you know it, resistance, support. Yeah, just feel free. Resistance. Anyone else? Liquidity. Oh, you see, those are the men. You see, those are the men. All right, guys. So let's just keep it simple now. This is a resistance. This upper part is a resistance. That's not support. Now let me just assist us. Resistance is where you sell from. Support is where you buy from. Now let's go a bit advanced. A resistance can become a support where there's a break and retest. What do I mean? Now, resistance. Good. Havilah set me up for this. He knows what I was saying about support and resistance. All right. Okay, good. So I want to just make two things. So I want to make it all right, good. Then let's make it supports. All right, good. So now we have this chart coming, high, low, high, low. Resistance. Broke through, All right, good. So this is it, guys. So this is actually a resistance, and this is actually a support. Let's just get more deeper. No. All right, so this is support. All right, good. So this supports, All right, good. So this resistance is support. Now, what do I mean now? Resistance is, that's gang of guys, those bad guys that, you're buying, and you just get to those guys, they just eat you guys back, and you guys, you were buying from this region, you're buying. Now there was this set of bad guys hanging here. When you got here, they sent you back to your house. Then you went to gather more momentum and you're coming back again. Now, with what? With a full force, you broke through. Now, in breaking through and you retest back, this resistance automatically becomes a support and you can start going. Do you understand? You can start buying up. So a resistance sent you back and became support. Vice versa, a support can also become a resistance. Let me see if I can quickly work that out for you guys. Gosh, a mistake. All right, beautiful. Oh shit. Just hold on, guys. Sorry. Let me see. Let's make this blue and let's make this red. Then, okay, so we have this this gentle guy coming downwards. Then the support kicked him back. Then the guy went to tell his godfather. The godfather gave him more power. And he blasted through and came down. So this is actually support. This is actually support on resistance. You get it, guys. So it's just what it is. Two different ways. It's coming. They were buying, selling down. Then the buyers, all the foods, go there and send them up. They went to gather more energy, and they came. They blasted through. So that's basically what support and resistance is. On a higher level, they are called liquidities. They are areas where the retail traders are always hanging, where there's always a buy stop, there's always a sell stop, there's always a buy limit, there's always a sell limit. And the big banks, the big guys will just come, take you guys out, trend line resistance and things like that, and take you guys money out and go your direction and feel, oh, So that's it. It is what it is. I'm not going to go more than that. Hope you guys understood. Head and shoulder, chart patterns, all those things. I think one of the educators will explain more about that. I don't want to go in depth. And I just want to stay within my lane of what I'm told to teach. All right, so next thing is support and resistance, premium zone. That's support and resistance. But to me, support and resistance are mirage. Yeah, I can say that out. They don't exist. Yeah, they don't exist, guys. That's the setup I've used me for. They don't exist to me. Nevertheless, I respect whatever your opinion is, but to me, it doesn't exist. They're mirage. All right, so Fibonacci premium zone and that and that and that. So this is what I'm calling a Fibonacci to you. There are numbers, that have. Let's just do it like this. Okay, good. Let me just edit coming. Let me off a lot of them. Yeah, so these are just numbers used to measure the retracement. Now, I told you guys in the beginning that the market does not just move anyhow, they move for certain reasons at certain points, you know. And you need to know this Fibonacci 2 is just like a ruler that I used to use to measure retracement of charts and some other stuff like that. Do you understand? So just to measure retracements of chart and things like that. All right, so now we have premium and discount zone. Now, guys, if you know how to use your Fibonacci 2, which part is your premium zone? It's a flick. Premium zones. All right, the upper part or the lower part, which one is the premium zone? Quickly, anybody? Amazing. Yeah, the upper parts. Amazing. Then lower part is what? The discount zone. Amazing. Thank you, guys. Thank you, guys. Now, let me explain something to you guys. Let me explain something. Let me just use a real-time explanation to help everyone understood because of the new guys we have on team. Now, guys, what does it mean? All we mean is that now imagine you go to a supermarket, you know, whatever supermarket you like to go to. Well, let's say Spa, you know, Spa, and then sometimes Spa does discounted price, you know, discounted price, which means the demand for those prices are not more higher again. You know, the demand are no more higher. The demand is very low. So you know what people will do is they start buying. They start buying. That's when, for example, Ethereum is dropping currently. Bitcoin is in a level on the weekly time frame that we are expecting to shoot up. Crypto is already in most cryptos are already in a region where we are expecting them to shoot up to go for a bullish run. It's not a financial advice though. So now you hear people tell you buy the dip, buy the dip, buy the dip. Why? Because at that moment it's already a discounted price, already in a discount zone. So they tell you buy the dip. Now, what is buy the dip? This is the dip region, you know. Buy the dip here between 0 and 50. And you know, when price now move from that region and crosses 50, it comes now there's going to be high demand. And when there's a high demand, what happens to supply? Supply will be limited, so it's called a premium zone. So you go to Spa and you see this nice air freshener body spray, and they tell you it's discounted. Let's say $23 discounted rate and things like that. You want to buy it, right? But that same body spray, you can go to that same Spa in the next 3 months, and they are not running any discount. Something you bought it both for $23, you can be seeing it for $100. It's called premium. Just look at your phones, guys. Look at your phones. Now, a phone comes out today, whatever phone you guys are using, you know that the exact amount you bought it 3 months ago is not going to be the exact amount it's going to be today. Why? Because it has become a discount. It has come to a discount zone. You understand? Now, guys, know this rule. We always, if you don't know anything, if you don't get anything out of this place, get this alone. Always sell. Always sell from your premium zone, guys. And your discount zone, always buy. Always sell from your premium zone, always buy. Never buy or sell in the middle. Guys, write it. I will never buy or sell from the middle. Write it down. Write it. Type it, guys. Type it. I will never buy or sell from the middle. I would never buy or sell from the middle. I'm waiting, guys. Let's drop it. I will never buy or sell. You know why a lot of people experience drawdown, experience losses is because you buy from the middle. The guys that enjoy the ride are those guys that caught it from the low parts. Now move the if you buy from the low part, you'll be able to accommodate any kind of retracement, any kind of bearish retracement. But if you buy from the middle, so when people are saying buy the dip, buy the dip, buy the dip. Now, how do you tell the difference between a discount and a premium zone? A premium zone is always 50% to 100%. A discount zone is always below 50%. Premium zone is always above 50%. Discount zone is always below 50%. That's just the answer. Never buy from the middle. Do you understand? And truth, guys, don't see the market is filled with abundance, and never jump into a trade even if the market has left you. Okay, you do the analysis and you got distracted and you saw, oh, the market has gone. Oh, I want to quickly enter. No, don't click that button. Discipline yourself. See, the discipline to not click a button even when you see your analysis is right is harder than a discipline to learn the charts. The discipline not to click that button when you see a trade going in your direction and you are not yet entered is harder than a discipline to learn Forex itself. So always buy from the discount zone below 50 and always sell from the premium zone above 50. No time frame, any time frame, anybody see. Now, let me quickly answer that question, guys. Whatever we work on time frame based on the type of trader you are. I need to quickly ship that in. We have different kind of traders. We have the position traders, we have the swing traders, we have the intraday traders, and we have the scalpers. You need to understand your type of trader so you can know the kind of time frame you have to work with. Nevertheless, as a trader, you should always do your analysis from top down, which means check the monthly chart, check the weekly chart, check the daily chart, 8 hours chart, 4 hours chart, the 1 hour chart to be able to get a directional trends and to understand what phase of the market are you in. Are you trading an expansion or a retracement? You need to understand that. After that, you will now come and choose a time frame to take your entry based on the type of trader you are. If you're an intraday trader, you should be having H1 and 15 as your friend. If you're a swing trader, you should be having daily H4 and H1 as your friend. If you are a position trader, then you should be talking about the monthly and the weekly, max, daily. Position, I know position trader that take an entry on the daily time frame. And if you are intraday, 15 minutes should be your friend. Scalpers, those that do gambling, I believe scalpers are gamblers. You just want to come and take 2 candles, 3 candles in the market and get out of the market. I believe they are gamblers. Nevertheless, they are guys making their money. You understand? Now, you should be using 5 minutes, 1 minute. Very simple. So that's how you know. There's no best time frame. Anything that happens on the monthly will happen on the 1 minute, even on the 1 second. All right, having said that, finally, introduction to ranges. Yeah, introduction to ranges. Finally, guys, say finally. All right, so finally, introduction to ranges. Now it's very simple, you know. You have the high of the range and the low of the range. What does it mean? Yeah, so yeah, finally. All right, introduction to ranges. So we have this range is a range. Yeah, that's the range. This is also a range. Maybe it's on that color. This is also a range. I'm gonna give it on that color. And finally, it is on that range. Alright, so this is on that range. These are different ranges. This is a range between this range. So you guys, you need to learn how to trade in between range. And can you see it? Low to high, higher low, higher high. So all these are ranges. All these are ranges, guys. All these are ranges. Do we understand, guys? If you guys understood, drop a 111 in the chat. You understood? Drop a 111 in the chat. Drop a fire emoji. Drop a fire emoji. Drop a 111. Let's blow this chat up before I go into the live chat. Let's blow it up. Let's blow it up, guys. Blow this chat up. Sheesh. Let's go. Let's go. Let's go. Let's go. Amazing, 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 amazing. I'm glad. Let's blow this chat up, guys. Who is ready to go check the chat with me? Who's ready to go check the chat with me? I want to see fire emoji. Let's blow it up. Sheesh. Let's go. Yeah. So I'm gonna be we surely have this video, so you guys will surely watch it. All right, so let's go to the main charts. Good. First thing, guys, what can you see? High, low. Don't forget it's a daily time frame. Daily, right? Yeah, high. Sorry, lower high, lower low, lower high, lower low, lower high. Yes, it's now why I'm going to just be doing like this. This is actually the body of the candle. So, like I told you guys, a week on the daily is a body candle on the lower time frame. You understand? So, you can see, if you look at this very well, look at it. And if you don't know how to get it, just turn your chart to a line chart. And let me go off this place. Now, just turn to a line chart. And you see it. You see it. Line chart will show you body structure and things like that. Show structure. You see, can you see there? Because line chart will always show you the body of the candle and all the wicks. Yep. So just hold on. Very good. So lower low, lower high. It was a lower low. And what else is it? What else happened? Break of structure. Break structure here. You see? Then price started going low, higher high, higher low, higher high, higher low, higher high. It breaks structure to the down parts. Breaks structure to the down parts. Also breaks structure to the up part again. Price does whatever it feels like it should do. So yours is just to be patient. This is the low, but yeah, it gives us this high, low, high. It breaks structure to the down part here again. Because structure. Then it keeps going and going and going and going. Very simple. Now we are the ranges. Look at it. Range to range. your first range. This is your first range. This, oh shit. This is your range. So hold on. To know range, use the week, candle week. So you, on that time frame, candle week on that time frame for range. So this place to this place is your range. And you can see how price did high, low, boom, high. Where's your next range? Let me change this color. And let me just hold on and make it bold. Okay, good. Right, so this was, oh shit. Just hold on. Okay, good. Alright, so this is your range, guys. Range, high, low. Then what price do again? It came to this place. It was this range. So this range. Can you see, guys? This to this range, this to this range. Now the next range is this. This to this place. Ancient's price has been respecting low range, high range. The low of the range. All right, so this is the low, high range. This is the low range. This is the high range. The low range, the high range. That's really all, you know. Now let's look at Fibonacci. Let's just look for Fibonacci. You take your retracement to. Now you use Fibonacci based on how you've mastered it. Now Fibonacci has different level, guys. It's Fibonacci. Different level. Personally, for me, I use my 88 and 78. Personally, for me, you see, sometimes when in forex, there are things that it becomes your own personal revelation based on the time you spend with the chart. Do you understand? So, for example, if I want to mention my range, just from here to here, just hold on. Coming. Now, guys, look at this. I hope you guys can see this. Should I change the color? Oh shit! I'm coming, and just give us a good lighter color. All right, good. Now look at, see, this is the low range to the high range. What did I tell you? You always buy beer. Buy anywhere below 50. Can you see? 50. It formed a new range. And it went up. Can you see? Now, if you want to measure your Fibonacci again, you come to this low range. Can you see? This is the 50 of the range. 50% of the range, which is your Fibonacci. Where did it form the new range? See where it formed the new range. Below what? 50. Can you see? This is the low range. Below 50, from the low range there. Can you see, guys? That's it. It's textbook, guys. It's textbook. Basically, it's textbook. So, quick one. Does anybody want? Is there any chart anybody want me to go over and just currency precisely? You want me to just show you this same thing there. How does range influence analysis? Now, range influence analysis in the sense that you will know where to target. You know, if you want to catch a bullish market, you know, you want to always buy from the higher low. So that's how range influence your analysis. You want to buy from the higher low. I don't know. I feel like I want to propose if maybe on the final day, after the final day, maybe we can have an 8th day where we just do analysis, you know, like group analysis. Everybody just come, we do analysis, you know, myself and the other educators, we analyze different peers, you know. There's going to be an in-depth analysis, not just, you know, so that everybody can see how we look at these things. Just a proposal, guy. All right, so let me just quickly go to
Yes, fam.
BDC.
I think the last day is for market overview.
Oh, amazing,
So
amazing.
if we can make it 7 and day 8, just to check back tests, check out for opportunities, analyze, and give free trade calls. Thank you.
Amazing, amazing. I'm in for it. I'm in for it. I'm in for it. Hope the last day is the day that I'm available. Then, guys, can you no? Hope you guys can see something I was actually looking at, you know, on BTC, and I don't know why though. See, I was actually looking for something on BTC there and went well. So let's just play this chart. Now, I told you guys that BTC is in a good region, right? I told you guys on weekly good region. Why did I say so, guys? Let's look at it quickly. Structure. High, low. Sorry, high. The low, high is closed above this. There was a break of structure here, and it went high above it again. This is a break of structure. Now, this is a very sweet region that you know, people are always looking at. There's a reason. We can always discuss that on other calls. So that's just basically structure. Now look at this. I want to show you something, guys. Just pure structure, no analysis. So this is the high, low, higher high, higher low, higher high, higher low, higher high. Then what happened? Break of structure. When you see this break of structure, then what the price do? Price came back into this region and respected it downwards. Range, simple. And it came down. Now let's look at this one. Look at this. So this was the high, the low. Then what happened again? Break of structure, right? No. The person that will teach you smart money will explain a lot of things about this to you. Price break structure here. Then he started doing what? High, low. This is a high, this is a low, this is a high that broke the structure again. Don't mind me, this is not something I just knew in a day. It's something I've trained my eyes over the years. So it's a bit easy for me to see now. You know, now look at this. So it broke structure there, then it came down, a low, a high, low, a high, a low, a high, and now it came back into this region. Yeah, so guys, that's all I can say on this call. That's all I can say on this call. Anybody has a question for me? You have any question? That's all I can say. Structure is king, liquidity is queen. Right? Does anybody have any question for me? I'm going to take questions now. Then I would at least in the next. I can't continue, bro. It's time. In the next 5 minutes, I'll be off this call. 6 minutes precisely. All right. Any question? Yeah. Any question, guys? Any question? Amazing, 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 amazing. There's no way to predict. In this market, you don't predict. You trade only what you see. You don't trade what you feel. Are they so that's that precious? Are they also this is not a financial advice class. I'm not gonna give you financial advice. Trade whatever you see on structure on your BTC, you know, trade whatever you see. Price already reacted from this region, broke structure, yes, sir. Trade whatever you see. Like I'm not giving financial advice. Anybody else? Please, what do you need to find entry? Is it on not to find entry? We still have different classes. This is just day 2. We still have 5 more days. So you get out. If you get out to find entries, you get out to find entry. Another question? I still have 5 minutes left. 5 minutes left, guys. Where do you start your range? You start your range from the low to the high of the week. This is it. Start your range from this the low of the week to the high. Then possibly, if you not use Fibonacci Retracement too, this is already below 50, right? Guys, this is already below 50, right? So this is what it is. Nevertheless, guys, I don't just trade structure alone. Listen, guys, never trade structure alone. Who is the spamming guy? Yeah, never trade structure alone. Trade structure with other confirmation. If you trade structure alone, you might have issues. For example, because you see all this high low and you feel that okay, you're expecting BTC to just do what? Come down and go up. No, it might not happen. It might even be like this. It might go down. It's price. Price has financing. That's why we don't trade what we feel. We trade what we know, what we see and what we know. So basically you just wait for something that other person said, something like reaccumulation and distribution, but that's for another class. So you start your range from the high to the low. Do you measure BOS using the week based on the time frame you are using? I measure BOS based on the body of the candle of the week on that time frame. On that time frame. All right. So what are other confirmation? What other confirmation you learn in between the course of? We still have 5 more classes. Big Zani. Join the next 5 more classes and then you learn. So I have 3 more minutes, guys. Is it best to look for structure on a coin? Definitely, you have to look for structure. It is structure that determines the range. It's trend. It's structure that shows you trend. So even though if the structure is, look at this now. Guys, look at this. Hold on. Look at this. This is a bearish market, right? This is bearish. And I still feel it might come up and come down again. Now this is bearish, guys. But what is it giving us structure? Market will never just do like this. Market will not just like no. Market must do something like this. It must do something like this. It must do something like that. Do you understand? Yeah. So I hope that answers your question, brother. Yeah, by break of structure. This is example now. This break of structure example, bro. Look at it here. Break of structure. Candle body not weak. This is the weak. What is the candle body? Why? Turn into line charts. Can you see it? line charts, if you don't know structure, use line chart. Line chart will close all the weeks. Can you see now? You see I'm correct? Line chart, simple. All right, so in your range, do you still consider the inner lower low higher? Yes, definitely. Definitely. Yeah, you consider them based on the kind of trader you want to be. I don't want to go too deep into some certain things because of the course I'm taking, but you consider them, and there are reasons you consider them. In the next few lessons, and someone will teach you that. Okay. All right. So thank you very much, guys. I appreciate you guys for opening on the call. Thank you very much, everybody. I wish you guys the best in your trading career, in your journey. I look forward to be part of those that we do a market overview with you guys before by weekends or which day it is. I look forward to be, and if I'm not available, I trust everyone educators. I want to implore you guys, please do all to go over this video to be uploaded on YouTube. Do all to go over them over and over again until you keep watching them, you get more understanding. Also, I want to advise you, join every other classes and don't join alone. Send the link to every group, spam every group, spam social media. This is the knowledge that people have paid massively for and you're getting for free. Spam everywhere with it. And yeah, Havilah, thank you very much for having me. I celebrate you, brother, and I wish you the best. Yeah, peace out, guys. I'm gonna be stopping sharing my screen now.